Welcome back to Gen W, where we break down the setups you can't afford to miss. This week, the market's flashing mixed signals. Long-term trends are still bullish, but short-term momentum is showing cracks. Tuesday's session left us with a field of inverted hammers across major names, suggesting potential continuation to the downside. Yet those same candles are sitting right above key support zones. So before you jump in, hit that like button, subscribe, and let's map out the plays that could define this week. Starting with SPY, the S&P 500 ETF. We hit new all-time highs last week before seeing 2 days of strong selling into support near 674. There's still a gap below towards 672.70. We are, however, sitting right at a key support level of $674. If we break under $674 with strength, I will look for a reject retest of the $674 level and look for puts at the $673 strike for this Friday's expiration. Target would be $669.65. If we dip below $674, close the gap and reclaim $674, then I will look for a bounce retest of $674 for call options using the $675 calls expiring this Friday, and I will target yesterday's high of day at $680. Remember, broader direction here sets the tone for everything else. Next up, QQQ, the NASDAQ 100. Tech, despite solid earnings this week, had a big gap down going into yesterday, had a nasty inverted hammer candle on the Tuesday session, and is slated to open on another slight gap down today. If we open below yesterday's low of day near $618.60 and then reject that level, I will look for $618 puts expiring this Friday and target $613. I don't see a call option being as likely today, but if we can reclaim $618.60 and retest that level as support, I may consider the $620 calls for this Friday and keep tight stop losses. This pullback is healthy, but stronger support structure doesn't really exist until closer to $613. AAPL has been range-bound but showing resilience. The daily chart has been noisy since earnings last week. Monday we had a hammer candle at a key level, but yesterday we tried to break the hammer high and failed, closing just below support at $270.25. If we can get over $272.50, I will look at the $275 calls for Friday and target all-time highs at $277.40. If we break below $260.60, I am not looking for puts, but rather I see $264.50 as a great place to look for a daily lower high, and I will look for $265 calls and target $270.25. Volume has been solid, and this could be the name that sparks tech if it catches support early. AMD just reported earnings last night, and while they beat expectations, investors are getting nervous that companies are overbuying into AI without seeing the profits yet. Today we are opening with a gap down and just below a key support of $240.35. If we can break above that level and retest it, this is an easy long using the $245 calls to target $252.75. If we reject $240.35, then I am looking for the $235 puts targeting $226.65. Semis overall are coiling, so AMD will likely move in sympathy with NVDA. Speaking of NVDA, this one's setting up beautifully. That was a pretty heavy bearish bar yesterday. We are coming into support near 195.25, so that would be where I am looking for $200 calls targeting $202. If we get more weakness from tech and semis, then I will look for a break under 195.25 with a retest rejection of that level to signal $190 puts targeting 189.50. NVDA remains a top-tier momentum name, so any move here will likely spill over into the rest of tech. MSFT has formed a nice hammer candle yesterday, and it's near the $506.50 support level. If we can break over yesterday's high of day at $515.50, look for $520 calls. I would take some profits at $518.50, but ideally I am looking to target $523.50. MSFT's daily chart closed yesterday, right at the 50-day moving average. This is either going to act as resistance or a springboard for support. AMZN broke out last week on news of their partnership with AMD and after strong earnings. Since then, we have seen rejection and sell-off at these new all-time highs. Yesterday had an ugly hammer candle, so I am not looking at calls just yet. To the downside, we can either open and reject yesterday's low or open and go down, but I am looking for break below 247 or 80 with a rejection retest, to then get in $245 puts targeting $242.50. Since that is also entering the gap, this could be something to swing trade, so I may consider using next week's expiration on the puts. Google has had recent strength and momentum, but the inverted hammer candle yesterday was ugly. There is no long trade for me until a better setup forms, but to the downside, if we break yesterday's low quick hands, we'll look for a put entry on the break using the $275 put options. If the break is too aggressive, I will look for a lower high to form before entering. The target is $270. If the market is weak, this will pay huge. PLTR remains a trader's favorite. This one is all about looking for support. Yesterday had an indecision doji on the daily chart as buyers and sellers battled. This morning it's slated to open lower but right near key support. If this goes lower, I am not touching this due to the choppy range to the left. If we can find support at $186.65 or $183.75, this could be the daily high or low we need and trigger the move up. I'd use the $190 calls on any signs of support or retests at those levels. RDDT is one of those new momentum names that's been volatile but tradable. The daily chart shows a downtrend, and yesterday was a big red bar that took us through support at $190. If we can retest yesterday's lows or retest $190, we can use the $185 puts. And there is nothing below us as support until we hit the 200-day moving average at $167. Don't expect this in one day, so I may consider next week's expiration on puts, but this has me salivating. TSLA is back in its range, which is less than ideal. I don't advise or personally trade when stocks are in these balance ranges, but if Tesla can break below $440 and reject it, there is plenty of room to target $419.75 with the $435 put options. A break below $440 also triggers a double top as added confirmation to the play. WFC, one of the few non-tech names on the list, continues to form this ascending triangle pattern. The last 2 days tried to break above, but it was rejected. If we can break above and retest for support, this can moon and enter all-time highs. This setup stays valid until it breaks under the green trend line. The tighter this compresses, the bigger the breakout is likely to be. Banks have been relatively strong, so use financials as a gauge for broader risk sentiment. As always, manage risk first. These setups give you direction, but execution depends on confirmation, volume, price action, and discipline. Volatility brings opportunity, but it punishes indecision. Be patient, plan your trades, and don't force anything. If this breakdown helped you prepare for the week, make sure to hit that like button, subscribe, and turn on notifications so you never miss the next Gen W update. Comment below with which ticker you're watching most closely. I read everyone. Stay disciplined, stay patient, and keep building generational wealth.